Hello and welcome to Northland Wealth's Market Insight. This is our attempt to bring our clients up to date and those who wish to plug into our service and our views of what the market is doing at the moment and what it may do in the near term and the kinds of problems that investors are facing in this rather difficult economic and market environment. Perhaps it would be a good idea for people to go back into the Artisan file and read some of my previous articles about the great deleveraging that we're undergoing at this present time. And deleveraging means the absolute necessity to pay back debt rather than build more debt, and the effect that that's having on economic growth and markets. Perhaps the first thing people should realize is that this particular process is going to take time, and in fact we think the environment that we're in right now is going to continue perhaps for 2 to 3 years. That means markets that go up and down and sideways, and interest rates that stay low. At the same time, economic growth is going to be indifferent, but enough to keep investors happy if they happen to be invested in the right place. So it's a matter of planning where you want to be and how to get there if you really want to have a good return on your portfolio. First of all, what is our general objective with clients these days? Because of the uncertainty of markets, we are focusing on cash flow investments, mostly in the dividend area. What has happened in fixed income markets is that bond rates have fallen just about as low as they're going to go. So the capital gains that some bond investors were able to reap back in early 2012 and 2011 are out of the market now. Interest rates are probably running sideways. So you're going to fall back on the coupon rate that you're investing in, which for most investments is around 2%. So that's a pretty low rate of return, and particularly for taxable portfolios, it's fully taxable. So we go back to the big dividend paying stocks, make them the base of our portfolios. We're intrigued by some of the higher yielding stocks, but in some of those cases, those dividends are not secure. So we look toward the Bell Telephones, the Telecos, the pipelines, and some of the other oil stocks particularly that have a very good background of continuing their dividends to build a base of cash flow for clients that they can depend on. Also, our experience with these stocks is that they're much less volatile than the so-called growth stocks. And while there's some growth stocks that have produced really excellent returns over the last few years, there's a number that have fallen by the wayside. Any little hiccup in earnings and return on those particular investments leads to a sharp fall in the marketplace. The marketplace is nervous, will remain so, and because of that, it'll punish with severity any stock that somehow misses their earnings objectives. So focus on the fixed income side only if you want to really hold some cash, but for growth and dividend cash flow, it's in those big, solid, dividend-paying stocks. As an alternative to the publicly traded markets in securities, which at any time is going to be very volatile and cause a little bit of lack of sleep at night, we are also investigating other areas, alternative investments and ETFs that provide good rates of return, some growth, but less volatility than your typical individual market stock. Now, the alternative investments can be in various areas. They can be in mortgages, they can be in real estate, or even in short-term traded bond portfolios. We find these investments, which are generally restricted to qualified investors only, can provide very solid rates of return with virtually no volatility, since these are not publicly traded securities. ETFs are a relatively new entrant to the Canadian markets and have grown rapidly, as they provide in each individual ETF a specific area to invest in. It may be a portfolio of individual stocks in the pipeline area or the bank area that can give you access to that area, diversification, and often pretty reasonable rates of return. And because they're spread out over a number of securities, provide less volatility than the market itself. So these are ways in which you can protect yourself against volatility, yet still participate in the income and growth in equity markets. Okay, what's the strategy that we think is best for investors? We're suggesting the cautious approach that we have stated. The emphasis on cash flow is the best way to go. Are we expecting markets to take off? Well, the United States market has been excellent in the last little while. The Canadian market is lagging mainly because we've got a fairly heavy commodity emphasis in our TSX. But there are significant uncertainties out there. The Italian election provided a bunch of politicians in Italy, most of whom seem to be against the European Union and even want to bring the lira back. This could cause major difficulties within the European Union. South of the border, the United States has just brought in some significant budget cuts. We'll have to wait to see just how that's going to affect the U.S. economy, which we're very dependent on. Other than that, the corporate sector, where we're actually emphasizing investment in equities and even in the debt side, this area seems to be the strongest in economies around the world. So there's some safety in investing in that part of the market. However, volatility with these uncertainties is still likely to be the measure of the day. So I think you really have to keep your head down as an investor, get those coupons and dividends in your pocket, and don't emphasize capital gains within your portfolios. So caution until we really see the end of this period of deleveraging, which may be a couple of years from now, and keep cautious, look for those cash flows, and that will be the best returns you can achieve on your portfolios. In the future, we'll deal with some of the immediate problems that we probably will see coming to the fore in the next month or so, and talk about maybe some more individual investments that investors can look at. If any of the viewers wish to put any questions to us, question some of the things we've said, please contact us. We at Northland Wealth are designed and set up to provide services to our clients and even to those who might be thinking of becoming clients. So please contact us. We're available at any time. Thank you very much.